All right, let's continue this conversation with the best of the best. Kevin Warsh, former Federal Reserve Governor, distinguished fellow at the Hoover Institution. You know, Kevin, just on that point, what Jerry Willis just said, you've got, and it's been reported in the Wall Street Journal, you've got a lot of smaller investors buying Trump's stock. This is a real retail story, and I think it is a way of showing support for him.
So I think it's a piece of that, but the broader markets are telling a similar story. The Federal Reserve, in spite of inflation that's running well above their target, says that they're going to be the first central bank in modern history to cut rates into a melt-up in stock prices. It's hard to find much of a historical precedent for it. The economy's re-accelerating, and even last week, the Fed chairman said that they've got 3 cuts coming. There's very little historical experience with it. No surprise that financial market participants say the Fed's got my back.
You've got, I mean, I don't see any reason for the Fed to cut interest rates. They'll be accused of juicing the economy to reelect Joe Biden. I don't think they want to put themselves in that pickle. You've got people like Chris Waller and Raphael Bostic, for example, smart guys who are saying not so fast, not so fast. I mean, what's the reason to cut rates here? You've got a stock market that's going right through it. Profits are doing very well. Profits are the mother's milk of stock. We have the commodities chart. If we put the CRB chart up, you'll see actually the CRB's been roaring in the last 3 months. That could be an inflation signal. Why should they cut rates?
So it's not obvious to me they should either, Larry. I wonder whether they're trying to absolve the big inflation error they made a couple of years ago by trying to somehow nail a perfect landing. But in so doing, they're taking risks with hardworking Americans who are living off of their income. As inflation moves back up, as it's shown some evidence the last couple of months, they're taking risks with those people, all to make people with large balance sheets that much richer. So it's hard. If you push me onto why it is, I think it's probably because they've got a faulty map and, in all likelihood, a faulty compass. I don't think they have a real framework as to what's driving inflation. What you and I know is America's inflation problem isn't because Americans are working too hard or earning too much or living too well. It's because the government's printing too much, the government's spending too much, debt financing too much. And that's the core of this inflation problem, and it's not going away.
We've had periodically a sort of semi-boring debate, but the Fed should keep the inflation target at 2, or they should raise it at 3. People want them to raise the target tend to be from the left, and they want them to, again, goose the economy for Joe Biden's reelection. Why should they raise the inflation target?
So they shouldn't. I think it's a very dangerous preoccupation, born in faculty lounges that say, oh, if the inflation target would be a little higher, they'd have more room.
And Senate cloakroom.
Well, there's, I'm afraid, a growing caucus for it. Now, central bankers around the world would say, no, they're not doing it. But if we observe their actions, they seem more comfortable with inflation closer to 3% than I wish were the case. That's very dangerous stuff. And certainly we can have an economic boom in that scenario, but there'll be a very high price to pay.
So in a perfect world, what should be done right now?
So first thing I think they should do is talk a lot less. If they want to cut rates, just cut them. Stop this idle speculation, stop this tease that is unmooring financial markets from the real economy, and just say, hey, listen, we're going to make an insurance cut or two and be done with it. This talking, I think, ties their hands in an uncertain world. The globe is very uncertain. The seas are showing a lot of problems. The East China Sea, the South China Sea, the Black Sea. I think they'd be better off to be quiet. And if they, come summertime, decide they want to cut and explain it away rather than this chatter every day. We're going to hear from Governor Waller tonight. But 19 people talking about how often they're going to cut isn't good for the economy.
Yeah, he's speaking at the Economic Club, I think. Wouldn't it be, this is, I mean, it's an oxymoron question. Why can't Biden stop spending? I mean, he just put out a State of the Union and a budget that just spends and borrows and spends and borrows. That's insanity. I mean, you've got unemployment down, inflation still above their target. It's insane. What is there an end to it? You're going to be at the end of the budget window, almost 50% of GDP. I'm sorry, 150% of GDP will be from borrowing. That's insanity.
It's insanity, but it's a little worse than that. It's the insanity that's causing these inflation risks. Point one. Point two. Under this spending in the last few years, the government is now 40% bigger than it was the day before COVID. We're at a time of full employment. There will be a recession. There will be wars. There will be needs to spend money. And we're taking that fiscal space and we're spending it and we're giving it up for very, very little benefit. In the president's budget, he says that the government will be 25% of GDP in the out years. We've never seen that before. He also says revenue is going to come in at 20% of GDP. We've never seen that before either. The American people tend to not give us as much money as Washington thinks, even when we're at full employment.
You're going to buy Trump's stock, Trump media?
I don't buy individual securities, as you know, Larry.
We're going to figure out an index, that's all. We'll just have a one-stock index, then maybe you'll buy it. Kevin Warsh, everybody, former governor of the Federal Reserve, says, let's stop what we're doing and try a new regime. Anyway,